I'm Tasha Seitz, partner at Impact Engine, and I lead our direct investing strategy for early stage and growth stage companies. I was a founding board member of Impact Engine, and I joined the team full-time in 2014. I am also serving as an adjunct professor of social impact at the Kellogg School of Management. This is my 25th year as a venture investor, and prior to joining Impact Engine, I was a partner with JKB Capital. Next slide, please. As Jessica mentioned, we're in our 10th year of operations at Impact Engine. Over the last decade, we've invested in 6 funds and 68 companies, which represents a combined 124 million under assets. We're proud to have been recognized by Impact Assets as a leading impact investing firm for 4 years in a row. We're committed to driving positive social and environmental impact at multiple levels through our investments, as well as on the finance industry as a whole, and with the investors that trust us to steward their assets to drive financial returns alongside meaningful societal impact. We create a theory of change for every investment that we make, and we require our portfolio companies and funds to report on the impact they're having. We also screen every investment for environmental, social, and governance, or ESG factors, as well as diversity, equity, and inclusion, or DEI. After we invest, we work closely with the teams that we back to support and improve ESG and DEI as companies grow. And we're willing to invest early in young companies and funds with the goal of playing a catalytic role and bringing a strong impact voice to the investor syndicates we're part of. We are also making an impact on the financing industry at large as a women-owned and led firm. Our team at Impact Engine is 63% women and 69% non-white. In our portfolio, we've backed 33% women CEOs and 36% non-white CEOs since 2012. We also strive to partner with the investors in our firm by partnering with them on their personal and institutional impact investing strategies, as well as holding regular events and publishing original content on our blog to share what we're investing in and why, and what we're learning along the way. We expect the companies and funds that we invest in to have strong alignment between financial and social returns. We're typically looking for investment opportunities where impact derives from the product or service that the company is providing, so that business success and social impact grow hand in hand. Every company that we invest in signs an impact commitment and agrees to report impact metrics to us on a regular basis. We often formalize these commitments in side letters and even advisory roles to drive engagement and accountability in our portfolio. We measure and report our impact to our investors biannually, and we also regularly review ESG risks and support our portfolio companies and funds in proactively managing and improving material ESG issues, including DEI. After we've completed our business and impact due diligence, we draft a thesis statement for every portfolio company that links its product or service to the outcomes we expect it to generate. We propose a handful of metrics along these 3 dimensions of scale, effectiveness, and access. Scale is about how much impact the company is generating. For example, how many people or units of impact, such as greenhouse gas emissions, avoided. Effectiveness assesses to what degree people are impacted, and access reflects who benefits from the product and to what degree they are underserved. We agree on a handful of metrics that the company will report over time, with the goal of improving the quality and fidelity of these impact measures over time, and we report these metrics to our limited partners. We invest along 3 key impact themes: economic opportunity, environmental sustainability, and health equity, which align with many of the sustainable development goals. Within these themes, we have several areas of interest, which you can see listed on this slide, including supporting hourly and gig workers, improving energy efficiency and reducing waste, and addressing aging, social determinants, and the affordability of healthcare. We find it is always helpful to have specific examples to bring these concepts to life, so we thought we would share a few examples from our portfolio. BookNook is a virtual literacy and math platform with a scaffolded approach to learning that has proven quite effective. Students using BookNook have increased by 1 entire reading level. Measurable is a sustainability platform for commercial real estate that provides actionable insights to property owners, managers, and investors, and is now managing and reporting on almost 12 billion square feet of commercial real estate. Work at Health offers a virtual solution for addiction treatment. More than 1,500 individuals have completed their Kickstart modules, of which 61% saw a reduction in usage and 95% reported improvement in their quality of life. To bring our strategy even further to life, we're thrilled to have two of our Chicago-based entrepreneurs joining us this afternoon. Feyi Olopade Ayodele from Cancer IQ and Mindi Knebel from Kaizen Health, who are both working to improve health outcomes and access. So without any further ado, I'll turn it over to Feyi to share more about her work and her impact.
Around us has a certain level of risk. There's maybe a smaller patient population that has these genetic mutations, but my goodness, some of these genetic mutations increase your risk of getting cancer by almost 87%. But there are also these patient populations with these family history risks, these lifestyle risks, these adherence risks. And we're finding that an increasing percentage of the patient population is falling into these high-risk areas, and nothing's being done. Because the problem, which we also see as the opportunity, is that most providers are taking this very diverse patient population that has different kinds of risks. And unfortunately, if we go to our next slide, they're taking a one-size-fits-all approach. How many people have been told, go get your mammogram and go get your colon screening and go get your cervical screening? Those are kind of the tools that your everyday provider is using. But what we see as an opportunity is by better understanding kind of what color you are on that risk spectrum, you can be offered something that's a little bit more tailored. You should be offered a prophylactic surgery if your risk of getting breast cancer is 87%. You should be offered maybe an at-home colon screening if you can't take the time off work to get a colonoscopy. And with this broader toolkit, providers can do a better job of getting ahead of cancer and preventing it altogether. But what's really exciting is the future landscape. Not only is the opportunity we have today to do precision prevention really immediate and palpable, but there's so many other technologies that are emerging, again, being studied in these academic medical centers, that we really want to get out to all providers that see patients today. They're developing vaccines for cancer. There are multi-cancer early detection tests that can detect cancer in your blood. And unfortunately, these innovations are still stuck in the hands of a few. With Cancer IQ, our goal is to make sure that every provider understands your level of risk, and every provider understands the multiple of clinical pathways that you can go down to help prevent cancer or detect it as early as possible. So now let's talk about what the company actually does. We have developed kind of an end-to-end cancer prevention program, which is taking a lot of the principles of precision medicine, where you're using data to find that, specific drug to treat your cancer, but we're applying it to prevention. And we've taken this platform and fully embedded it into the EHR so that there can be broad adoption across multiple service lines within a health system. So that ultimately this software can be used in places before a patient gets diagnosed with cancer. Our business model is really a win-win for all parties involved. We sell our software to health systems that get a ton of value from offering precision prevention services. But we also have commercialized on the other side of our network through some of our diagnostic company partners, the people who sell those genetic tests, the people who are trying to broaden access beyond just the ivory towers of academia. And what's great about what we do is that we've proven our impact in so many different clinical specialties. The first of those, next slide, being in oncology. In oncology, what we've been able to do is we've been able to actually increase access to genetic testing by expanding the productivity of those who are those kind of genetic specialists. And by being able to do that, they're able to not only just take care of the patient in front of them, but take care of that patient's family. And not just generate revenue from treating cancer, but generate revenue from all of these preventative services that the health system can offer in addition to those traditional treatment services. But we've not only proven our value in oncology, we've also proven our value on our next slide in preventative care. In preventative care, Cancer IQ has done the same thing. We've risk stratified the patient population. We've generated a lot of revenue from preventative services, but we've also been able to improve cancer screening compliance, right? So that 58-year-old patient that I was talking about that just couldn't take the time off work, ultimately got something different and was able to actually comply with the recommendation that ultimately could have detected his cancer early. But my favorite outcome, which is our last slide here, is about what we've done overall to truly achieve our mission, right? Curing cancer is a huge, huge, lofty goal, but to end cancer as we know it, which is a death sentence, is something that's actually palpable and something Cancer IQ is starting to do. We track what percentage of patients are diagnosed in stage 0 and stage 1, because those are the patients that are most likely to survive cancer. Those are the ones that will really see cancer as a simple episode of disease. And we're really proud to have tracked this among some of our clients and seen a dramatic increase in the percentage of cancers that are actually diagnosed in that earlier treatable, more survivable stage. So that's what we're doing. That's the broader impact that we're making on providers and patient populations. But why is it important to have impact investors to invest in this kind of company? That's my last slide here. My vision for Cancer IQ has always been to make Cancer IQ really a broader network and really engage all parts of healthcare, because it's truly a win-win-win. The anchor part of that strategy was taking Cancer IQ and commercializing it in health systems that, quite frankly, work really slowly, are difficult to get into. And had I gone to a traditional venture fund, they would have said, oh, this is going to take too long. This is too slow. Maybe you should consider some other business strategy. But by working with people who care about the impact, in addition to those financial returns, they really let us build a vast network and this provider network that we're now able to commercialize through partnerships with labs, partnerships with pharma, and again, the additional revenue levers that you can put into this flywheel. So I can't thank Impact Engine enough for believing us when, again, our business model was really single-sided and we were trying to go door to door to all these large health systems. Because I'm proud to announce that we are now in over 40 different health systems. We're in over 200 different hospitals. And we've not only signed on all of those lab partners, but we're now actually Series B funded, backed by pharma companies, and really trying to bring that third layer of our business model and that Cancer IQ network to pass. So thanks everyone for listening more about Cancer IQ, and totally happy to answer any questions.
Thanks, Feyi. And we're going to hand off to Mindi next. We'll come back for Q&A.
Perfect.
Hi, everyone. My name is Mindi Knebel, and I am the founder and CEO of Kaizen Health. Kaizen is a logistics company that I started because my own family struggled to access healthcare in a variety of different ways. Transportation, frankly, was something I had kind of taken for granted my whole life. In Iowa, where I grew up, they shove you in a car at like 14 and say, get going, because, your school's 30 miles away and your parents don't want to drive you that far. And then I moved to Chicago in the Lincoln Park neighborhood, where there were buses, trains, and taxis, and then eventually Uber and Lyft around. And so it was something that I really hadn't given a second thought to until it was put in front of my face many times over in a short period of time, which led me to kind of dig into this space and realize what a challenge that access is to living a healthy life. Now, this is not my quote, but something that we truly believe in here at Kaizen. Transportation should always connect and never divide. And unfortunately, right now, transportation is very much a dividing force. As we all know, the further you get out from city center, or as you get to more suburban and rural areas, transportation can be much more difficult if you don't own a vehicle, have enough money to pay for gas and insurance, or have the ability to drive that vehicle on your own. I'm going to talk through a few different projects that we have worked on over the past 6 years and kind of talk about the intersection of private and public partnerships, because I truly believe in order for transportation to not divide, we need to be able to bring together both private and public options. The first one I'll touch on is Go Bus Plus. So we were fortunate to be awarded a grant from Ford to work with the city of Grand Rapids on expanding their PACE bus system. So the project that we came up with was really exciting because it worked with a lot of folks who were vision impaired. And so we got to learn a lot about our technology and to make sure that it was equitable for those who had visual challenges. So we combined their existing PACE system with private wheelchair accessible companies and rideshare services to expand their reach, both geographically and from a time perspective. So the PACE system only ran, Monday through Friday, say something like 8 to 8, and then, maybe Saturdays and Sundays for a few hours. Now we all know that getting to the grocery store, getting to a healthcare appointment, going to the pharmacy, going to our jobs, they don't all take place during those hours. And so by being able to extend the reach and the timeframes that the PACE system was available, we were able to offer a much longer service timeframe and a much larger service area, and also reduce the cost of the program overall. So that was a really great implementation there. Unfortunately, it took place during COVID, so we didn't get probably as many riders as we had hoped during that time, but learned a lot and hope to implement that further with other municipalities in the future. This is probably one of the best things that I think that I'll ever work on in my life, because we really got to take a stab at trying to prevent infant mortality. The results are not finalized yet. It was a full IRB project. The city of Columbus has the highest rate of infant mortality in the United States, specifically Franklin County. And when Governor Ginther found that out, he immediately set out to figure out why. They hired one of Google's consulting companies, Sidewalk Labs, to really dig into the reason there. And they really figured out that it was a lack of transportation to prenatal and postnatal appointments, as well as a lack of access to fresh food. Now, the women who we were interviewing for this project all had Medicaid as their health insurance, and through Medicaid had a transportation program. The problem was they didn't use it because it didn't fit into their lifestyle. So traditionally in Medicaid, you have to be picked up at home, dropped off at home, and given 2-hour windows on either side of your appointment. Moms are young, busy people. Oftentimes they may have other children, jobs. And so, being at home to be waiting, sitting and looking out the window for a car just wasn't something that fit into their lives. So they didn't use this transportation program to go to their appointments. We were really able to work with 2 Medicaid health plans from the ground up on plan design. We designed a program. The women had access to a web app, a mobile app, and they could also call us with any of their needs. They had access to 4 different types of categories of places they could go. Of course, their providers, pharmacy, social services, and food. One of the things as we started digging into the food section, we started with the designated organizations that would accept SNAP and WIC, which at face value sounds like a great idea. We started looking at that list, and in Franklin County alone, there were over 10,000 locations that accepted SNAP and WIC. And when you start looking at that, you start realizing these are a lot of 7-Eleven type, corner stores, and it's not grocery stores, food banks, farmers markets, place where you could actually get real fresh food. So as we started to narrow that down, we really realized the distance that these women were having to travel to be able to get to fresh food. The other thing with Medicaid transportation that is very nonsensical is that you have a month after the time that your baby is born, to take them to sort of their first month appointments, but you can't bring any other children with you. So if you have a 2-year-old at home and need to take your infant to a postnatal check-in, through the Medicaid program, you're not able to take your 2-year-old with them. So that is another reason that these women did not use this plan as sort of established for many decades now. So it was really great to look at how do we fit this program into the lives of these women that needed it most. So for those 4 categories that I mentioned, so long as they were within the trip limit and within the distance limit, as long as they were connecting to a pre-approved location, they were able to be picked up from anywhere and dropped off at any place. So they could be picked up at work, go to their doctor's appointment, and then be dropped off at home. So really making transportation a good part of their lives. Next. Food insecurity is something I'll touch on really quick. We have delivered food. So not only can we move any person around, we can also deliver food, prepared food and groceries, pharmaceutical supplies. During COVID, we worked with a health system out in North Carolina with local restaurants to support those folks as well, to serve prepared meals and groceries and deliver those to folks who couldn't get out of their home. And that was all based on the disease state of that person in need. So again, a really good example of people, private and public partnerships working together. Next. Most recently, we've dipped our toe into the K-12 education space. In December of 2021, we signed a contract with Chicago Public Schools. So at that point, there were many children who had not been to school this school year because they lacked transportation, because many of the traditional transportation providers, there had been a mass exodus of folks that retired. So we jumped in with both feet, learned a whole new area of the social determinants of health for us, and started getting kids to school every day. So we've been at that for 3.5 months or so now, and are providing somewhere between 5,000 and 7,000 rides per month to children at Chicago Public Schools, and that we plan to grow that into next school year as well. So thank you for your time, Impact Engine. Thank you for believing in Kaizen. It's been such a blast to kind of start in the clinical space, but really expand our access across the social determinants of health, because as we all know, our health isn't what takes place in those 4 clinical walls, but it's everything that we do in life, from employment and education, health and food and housing. So thank you so much, and look forward to chatting with you all later.
Thanks so much, Mindi. And thanks so much to Tasha as well. Hopefully that helped bring to life a product-based approach to impact investing. Now I'm excited to welcome Andrea Zapp, managing partner of Cast Us, to talk about a totally different but equally impactful approach using a people and place lens to impact investing. Prior to joining Cleveland Avenue, Andy was the president and chief executive officer of World Business Chicago and president and CEO of the Chicago Urban League, as well as deputy mayor, chief neighborhood development officer for the city of Chicago, among many other impressive steps in her career. Currently, she is also a member of the board of directors of Chicago State University and the Henry Ford Health System, among others. She's a very busy person, and we're honored that she took the time to be here with us today to tell us about her work at Cast Us. Thanks so much, Andy.
Thanks, Jessica. So happy to be here today to join you to talk about impact investing and to learn even more about the exciting things you're doing at Impact Engine. And happy to talk a little bit about Cast Us and to introduce you to 2 of our amazing entrepreneurs. So I want to start by briefly framing the problem that we're trying to address at Cast Us, which really involves the barriers for entrepreneurs of color. The first and most significant one is access to capital. And if you look at, we have some data that talks a little bit about the amount of investments that are made into companies led by entrepreneurs of color and by women. And you can look at this data and see here for Black companies, owned companies, only 1.2% of available capital investments, received investment in 2021, and 2% of the Latinx companies, and 2.2% of the capital really went to companies led by women entrepreneurs. So you can see that incredible disparity. What I'll tell you is we originally had this data from 2017. I had this slide updated recently, and the needle hasn't moved much. So we still have a lot of work to do. And the data, if you look at some other factors, which we also looked at, you'll see that the data, it's not just about access to capital, which is a really important one, or venture capital support. There are other data factors that impact entrepreneurs of color and women. So for example, if you look at loans to businesses led by Black entrepreneurs, and you can see that the interest rates are higher, that they're denied at a much higher rate, 2x rate, and there's a difference between how much they can get when they even can get a loan. And all of this, we felt at Cleveland Avenue, was driven in part by the lack of access of investors of color to help engage in this ecosystem. And so to address those challenges, Don Thompson, our CEO, started talking first to the state treasurer's office. And you've heard already some commentary around the importance of public-private partnerships. And this was one. And our first LP, limited partner and investor in our fund, was the state treasurer's office. And the fund is was originally created as Cleveland Avenue State Treasurer's Urban Success Fund. But when Don started talking to other investors, including Jessica Yagan, who is one of our investors, many people wanted to get involved. And ultimately, we were able to raise $71 million, which is really focused on two important sectors. One is women and companies, women entrepreneurs, Black entrepreneurs, and Latinx entrepreneurs. And the other is also trying to put as much of our money as we can into either companies located on the South and West sides or that are going to impact the South and West side. So the fund, our goal is 75% of our money will go to Black, Latinx, or women-owned, or Latinx-owned entrepreneurs. 50% will go to women entrepreneurs, and 75% of the money will go to businesses that have a positive impact on the South and West sides. And that's really defined pretty broadly, whether their operations are located there, they're hiring from those communities, from communities located there, or they have a business model that may have an impact there. So, for example, one of our companies works with focuses on helping entrepreneurs, and particularly entrepreneurs of color, build their presence online and their marketing presence. And we're hopeful that they'll continue to help and work with entrepreneurs on the South and West side. And I'm really pleased to say, so Castos launched about a year ago, March of 2021. So we're just completing our first year. We now have 12 portfolio companies. All of them, as you can see, have at least one founder, Black or Latinx owned founder, and several of whom also are led by women entrepreneurs. So we are meeting our numbers there. We're hoping to continue to expand more in terms of companies and both investing in companies located or impacting on the South and West side. But really excited about the portfolio. We're investing in companies that are typically already operating, having typically about $250,000 to $500,000 worth of revenue. Our check sizes are about between $500,000 to $2.5 million. So really what we're trying to do is to take companies that already have a track record, that are growing, but are at that level where they really need capital to grow, and they're challenged to find that capital because of the data that I showed you earlier on. And so that we're really helping them to grow and therefore have a broader impact. And so with that, I'm very excited to bring two of these little dots to you today. The first is Tackle AI, led by Sergio Suarez. Tackle AI, as you will hear, is a company focused, a software company here, focused on using AI to help really dramatically change how companies use or can manage structured data and turn it into accessible data in what was used to be hours and days and high cost with number of people to review the data to literally minutes. Sergio comes from a family, has an entrepreneurship in his blood, and he's excited about innovation and growth. And I'm really pleased to turn it over to you, Sergio, to talk about Tackle AI.
Thank you very much, Andy. I really appreciate that. Hey, everybody, thanks for coming out. So I tend to be more of a conversational presenter. So I'll make sure I look at some of your faces that have your camera on. So I really want to start off today by kind of talking a little bit about a story that happened to me. I was doing a podcast recently, and it was going pretty well. It was in the financial sector. We're talking about how to extract information from loans, and about halfway through, he tells me, you know, Sergio, you don't look like somebody that VCs would invest in. You know, you're a big, bearded Hispanic man, and tell me about that. And I was like, man, I don't know how to respond to that, you know. But I understood what he was saying. He was actually trying to compliment me. He was trying to say, hey, you know, you're not a white guy from an Ivy League school, and you know, you've raised over $5 million for Tackle AI. You know, it came off wrong, I think. And I think that for me, I really look forward to the day when big bearded Hispanic men are just part of the crowd in the VC world. You know, that's why I'm a big fan of what Castless is doing. They're helping that become a reality, and that's one of my, you know, a main focus of theirs, which I really appreciate and why I love partnering up with them. I have with us here at Tackle AI, people like to refer to us as the plumbing of the AI world. A lot of the companies that you've kind of heard that I'm really impressed with, that, you know, I heard before me, a lot of what makes them kind of work is the data. That's what they're big in, is how do we get data in order to find the analytics, to do the things to help people. The main issue is that a lot of times this data, and 80% of the time, this data is not well structured. It's not in a database where you can just go grab. A lot of these hospital systems and financial institutions and legal firms, they send PDFs to one another. You know, they send each other a scan. And even if they send each other a Word document, just because you have a Word document doesn't mean that you know who the patient is or who, what the loan amount is. It just happens to be another digital piece of paper. And I think that's what we focus on, is let's find these documents, even if we've never seen them before, and be able to extract who does it belong to, what's their date of birth, what's the social security number, etc. It's a big problem. People have been trying to solve this with something we call RPA, which is robotics process automation. But that really revolves around zoning documents and saying, hey, I've seen this document before. Here's where you go find the info. That only works for documents that you see all the time. And most of the documents that healthcare providers are getting are from all kinds of different labs and kind of all over the place. So that was our main focus. Can we teach an AI to not just learn documents, but the concepts of a document? Luckily, we're very successful at doing it. We take a different approach to what other people are doing out there. Our AI is built from the ground up. There's very little third-party tools that we're using. We're mixing stuff like deep learning models, which is really cool, with a lot of our own core logic engines. A really good example of what we've been doing in healthcare, we're getting about 150, 160,000 healthcare documents in a day from 16 different hospital systems. We have to identify what the document is first and say, well, I know this is an MRI report, or the AI knows that this is a CT scan. And then based on the sort of document, it's about extracting that information and populating the electronic health record systems like Cerner and Epic, et cetera. This is something that used to take our client 48 hours to do. Tackle AI processes one of their documents in under a second. So we're able to process everything that they need in 24 hours, which has been fantastic. And we can go faster if we get more hardware. So it's been a really big success. We've been really, really happy with where we've been with them. But on top of that, we've really moved into a lot of like redaction as well in legal. Big class action lawsuits are happening, and they have to give all of this information to courts. Sometimes it takes many years to redact all this information so that these things can go forward. We've been able to automate that. Just recently, we did a proof of concept with one of the largest e-discovery platforms in the world. They processed 50,000 documents. It took them about a month, cost them about $250,000 to $300,000. They used us. We processed the same amount of documents in 17 minutes. Their accuracy rate was 87%. Our AI was 95%. So, and with room for improvement, which is what's amazing. They're pretty much stuck at their 85, and our AI will continue to get better. So that was a big kind of thing for everybody, and kind of immediately started to get a lot of contracts and stuff like that from people looking for us to redact their documents. But I would love to be able to give you guys a quick demo here of what it is that we do, because I think visualization is pretty cool. Let me just find my mouse. There it is. I'll show you guys what we're up to. So I'm assuming you guys can see my screen okay. So here's an example of what we do. These are all real documents where we've changed the people's names and the signatures, so there's no PHI or anything on here. As you can see, our AI is able to figure out who the patient is, what the date of birth of this patient is, the physician, the medical record number, what the medication is, and the pharmacy. Now, I like to point out to people, it's not like it says patient, and then I look to the right, and that's where the patient is. That would be very easy. The doctor, it does help that it says doctor in front, but for the most part, we pick it up even if it wasn't there. We're able to pick this up, but on top of that, we're able to do things like figure out that it's signed, because with this particular client, we need to make sure that these things are signed. If they're not, it goes back to the client and they have to give it back and it has to get signed. The other thing that we end up doing is finding things like this, like stamps where they put the date. Regular optical character recognition really fails at these sorts of things. And this is really where we excel, is things that are very difficult to see, where optical character recognition, or OCR, I'm sure a lot of you guys have used it, fails. We're exceptional. I like to give an example. We have something called Tackle Vision, which is our version of OCR. And what we do is, I'll give you guys an example of one. Here's a stamp. As you can see, it's red. There's a bunch of lines going through it. It's very unclear. Yet our AI is able to read it and knows that's July 17th, 2019. Same thing over here, where here's another document. We're still able to see a lot of this. Now, obviously, we're very general in what we do, so people want to use us for a bunch of things. Our main focus is in the redaction in healthcare documents, or also the extraction of information. But additionally, we do this with invoices. We've had clients using this for a couple of years. There's nobody on the market that comes close to how good we are at redacting or even processing these sorts of invoices. So you'll notice here that this happens to be a mortgage company. So we're able to pick up, a loan number, which is important to them. We're able to figure out when it was the date. And you can see also it's like a different format. It's not like a regular format for the date. But one of the things I like to really showcase to people is, one of the ways that people will try to solve this is using something like computer vision. And if you use computer vision or deep learning models, it will always tell you that the total is $6,041.32. But that's not the total. The total is actually $650.75. And what's being processed here is some super complex algorithms that go through here and figure out what's a subtotal, and then processes all of this. Our accuracy rate is over 97% with this. Most humans are about 90 to 91. So not only are we faster, we're more accurate, and we do it for about 1/10 of the cost. And that's kind of what we're up to here at Tackle AI. We are growing very rapidly. We have tripled our sales numbers year over year. This year, we're kind of set to do 4 times our revenue or 5 times our revenue. Oh, sorry, guys. That's me. Apologize. I had a timer on. But yeah, so we closed a round with a few of our investors. We're in the middle of another round. We're raising $10 million. Luckily, that's going very well. We've been able to triple our what we're worth in the last 8 months. And yeah, we really want to thank what Castless has been doing for us. And it's really been a really cool partnership. So with that, guys, I appreciate it. I'm going to hand it back to Andy.
Thanks, Sergio. Amazing. The technology blows me away every time I see it. With that, I'm now really excited to bring up another one of our portfolio companies, IO Foods, and Perteet Spencer, who's a co-founder and CEO. And this food is from her history and from her life, bringing West African flavors to a broader audience. And the food is amazing. And because it is amazing, the business is growing at great guns and really expanding. And so I'm really excited to introduce you to Perteet Spencer and IO Foods.
Andy, thank you so much for not only that warm introduction, but also all the support of you and the CastS team. The team has been instrumental in our success, and so thrilled to be here today with you to talk a bit more about what we're building at IO. So I'm going to start with an interesting fact. So if you look at our caloric intake daily, about 50% comes from 3 crops. That's right, 3 crops comprise about 50% of our diets. If you go to about 75% of our diets, it goes up to somewhere between 5 and 8 crops. But what that means is there's thousands of others that have the potential to enrich our diets, positively influence our environment, and create lasting economic impact that are frankly untapped. And many of these crops are coming from West Africa. So when we launched IO, it was really about how we get more usage of these kind of underutilized crops. And so I'm excited to share a little bit about what we're up to today. So IO literally translates into joy. It was really inspired by these incredible moments that we had as a family growing up in a Liberian home where we had a ton of great West African food. And we launched the company with the goal of really celebrating the ingredients and flavors of the diaspora, delivering joy through flavor to create this new growth platform in grocery that really diversified our palates. We do that in 3 ways. The first is we're environmentally additive. So we like to consider ourselves upcycling originators. We're celebrating soil enriching, CO2 reducing crops like agusi seeds and millet leaves, really as the heroes of our food. We're also pioneering a farm to fork model in mainstream grocery, where we're building direct farm partnerships, not only in West Africa, but stateside here with leading organic farms like Anson Mills as an example, really bringing new farm fresh flavors to the grocery aisle. And then we partner with leading diaspora chefs, really to drive excitement and adoption for a new platform like IO. We launched in July of 2020 with a line of 3 frozen items. We're now officially, as of today, at 9 frozen. So you see 6 here, but we're starting up 3 more as we speak. And then we're also actively actioning our vision to build a platform brand that celebrates the diaspora across the store with the launch of our shelf-stable hot sauces, which released late last year and are scaling as we speak. And we're making meaningful progress. So as I mentioned, we launched in July of 2020 in about 50 Whole Foods stores in the South. As of today, we've extended our distribution by over 90x, so 4,700 doors to a vast array of retailers across the country. And we're bringing incremental consumers into the aisles of these stores. But above and beyond the impact that we're making at retail, we're also making a real impact on the ground in West Africa. Here is a bird's eye view of our IO Foods farm, built in partnership with a tremendous organization called Girl Power Africa. One of our core beliefs is that real food can do real good. And with that in mind, early on our journey, we started to reinvest in the communities that inspired the brand. And so here you're seeing both a land clearing, a housing structure in the early yield of crops built from the farm, which yield will currently be used to support new economic outcomes for women who were victims of civil war an Ebola epidemic in Liberia. There's an African proverb that says, if you want to go fast, go alone, but if you want to go far, go together. And we invite you to join us in diversifying the palates of consumers in the US and beyond. Thank you.
Thank you so much, Perteet, as well as Sergio and Andy, for bringing to life another great example of an impact fund. Hopefully, those of you who are watching could really see just a small slice of the diversity of impact investing that's possible. And actually, if you don't mind to bring up the next slide, I want to share with you, we've been updating the Chicago Impact Fund landscape recently. You can see there's a very robust ecosystem of impact funds in Chicago. Some are investing only in Chicago, some internationally, some nationally. It's a real mix actually across asset classes, across geographies, and impact themes as well. Like, what is the P that they're focusing on? Multiple Ps, maybe underneath each P, what is their focus, right? And also range of goals around financial and social return. So again, it's about intentionality, and hopefully, you having seen the two examples today of funds where there really absolutely does not need to be a trade-off between financial and social return. And in fact, they should reinforce each other in the strategies that we heard today. But also, in this list of funds here, you'll see a real range, some of which are very much market rate, competitive, above market rate type funds. And then others that, are very specifically saying, I'd prefer to take a lower financial return in order to maximize impact in some other specific way. So I wanted to share this to just give everybody a sense that this is just two examples of, potentially tens of thousands, hundreds of thousands. I don't know what's out in the world, but here just in Chicago, we have over 30 that are active, and this is, I'm sure, missing a few. So please, reach out and share if we're missing an important one here that should be added. We're going to be posting this complete list with links to each firm or fund and other statistics about the Chicago impact investing ecosystem on our website later this week, alongside recordings of our sessions, the slides from the sessions, and also summaries, written summaries of the sessions. We have a Chicago page under resources on the Impact Engine website, and we'll be blasting it out via our newsletter as well at the end of the week, so that people can dig in more and get even more involved in the Chicago impact investing ecosystem. It's been really an honor and a pleasure to be a part of it over all these years and see it evolve and grow. Unfortunately, we had run out of time to offer Q&A with our speakers today. I want to thank the speakers again. We did capture the Q&A that you submitted along the way. Thank you for doing that. And we will try to address it if we can in the write-ups that we're doing, if possible. And otherwise, we'll have other events, and we'll take these Q&A into account for some of the topics and themes that you'd like to explore moving forward. So thanks again so much for joining us today and also throughout the whole series. This is our last session, so we're closing out for 2022. There's a QR code here if you don't mind taking a quick survey to give us feedback, and we'll try to come back in 2023 bigger and better. So have a great afternoon. Thank you.